So, Subramanian sir, we
Yeah.
will start, sir.
Yes.
Yeah, okay. Secretary of the branch, CA Prashant Kumar. Learned speaker of today's virtual seminar, CA R.Subramanian. Senior members of the profession, respected past chairman, my colleagues in the managing committee, my dear professional colleagues, a very good evening to you all and welcome you all to this virtual seminar of today's topic, issues in GST and latest amendments. We, the members of Visakhapatnam branch, convey our heartfelt thanks to the speaker of today's session, CA R.Subramanian sir, for accepting our request to address the members of Visakhapatnam branch.
Thank you.
The start of new calendar year 2022, the GST law also enters into its new era by enacting various amendments in GST law, which was proposed in the Finance Act 2021. The latest and 46th GST Council meeting, which was held on 31st December of 2021, Union Finance Minister Srimati Nirmala Sitharaman led meeting has decided to defer the GST rate hike to 12% for textiles. CGST Rule 36(4) is amended to remove 5% additional ITC over and above the ITC appearing in GSTR 2B. From 1st of January 2022, business can avail ITC only if it is reported by supplier in GSTR 1 and if it appears in the GSTR 2B. The due dates, all of us very much known that GSTR 9 and self-certified GSTR 9C for the year financial year 2021 has been extended up to 28th February 2022. Further amendments are carried out to seizure and detention rules, penalties related to the same, and certain forms such as DRC 10, DRC 22, DRC 23, and APL 01 stands amended with the addition of new form DRC 22A as per the Central Tax Notification 40 of 2021. The officer can issue notice under section 74 to multiple persons for tax short period or excess ITC claimed by fraud. Now it is amended that officer can confiscate and seize goods or vehicles even after concluding proceedings against all the persons liable to pay the specific or general penalties. The taxpayer cannot file GSTR 1 if the previous period's GSTR 3B was not filed. GST officers can initiate recovery proceedings without any show cause notice against taxpayers who underreport sales in GSTR 3B compared to GSTR 1 under section 75(12). All the e-commerce aggregators into food delivery services or cloud kitchen under section 9(5) will be liable to pay tax on services provided through them. However, restaurants with accommodation with a tariff per unit of more than 7,500 per day are kept out of the scope. That is a different issue. The scope of passenger transport motor vehicles is expanded to include service rendered through omnibus and other motor vehicle, but not just radio taxi or cabs under section 9(5). And other few more amendments include like service provided to members. There is an amendment. GSTR 2A, 2B matching should be mandatory. Changes in provision relating detention, seizure, and confiscation of goods. Power to recover tax where GSTR 3B not filed. Attachment of property and bank accounts as per the current provisions. Power to call the information under section 150, 151 of the Act is being amended. Filing of GSTR 1 not allowed if GSTR 3B not filed, as I said earlier. Aadhaar authentication also made mandatory, and many more. To discuss and explain in detail about the amendments in GST and also the various issues under GST, we have eminent speaker with us today, CA R.Subramanian from Chennai. Let us gain thorough knowledge with his deliberations on this topic. Now I request CA Arunapriya to introduce the speaker of today's virtual session, CA R.Subramanian ji.
Thank you very much, Chairman, sir. A very good evening to all of you. I take this pleasure to introduce the speaker of today's session, CA Subramanian R. CA Subramanian R is a BSc graduate, ICWA of CA, and a law graduate practicing as a chartered accountant since 1996. He has over 25 years of experience in professional experience in direct tax and indirect tax practice, and is the founder and senior partner of Subramanian and Associates, headquartered at Chennai and having a full-fledged branch office at Bangalore. His area of specialization includes income tax, GST, besides the recently repealed legislations like service tax, excise, central sales tax, and VAT. He has delivered presentations in over 700 orientation seminars on GST and addressed seminars on GST even prior to its introduction in July 2017. and he continues to address the seminars and meetings on GST post its introduction. He has a very unique distinction of having trained the government and private sector employees on the nuances of GST. He also trains the GST officials of state and central government. C. Subramanian regularly appears before the direct and indirect tax authorities. He regularly addresses the members and students in seminars, study circles meetings conducted under the auspices of the Institute of Chartered Accountants, Institute of Cost Accountants, and Institute of Company Secretaries of India. Besides, members of various chambers of commerce, association, and other bodies representing the trade and industry. He is also an approved valuer accredited by IPBI. He has been selected as the GST faculty by the Indirect Tax Committee of the Institute. He has contributed to the preparation and publication of Technical Guide on Annual Return and GST Audit brought out by the Institute. With these few words, I take this pleasure to introduce today's speaker, C.A. Subramanian R. Thank you, sir.
Thank you, C. Arunapriya. So now I request the speaker, C.A. Subramanian sir, to take up deliberations proceedings.
Good evening to all. Am I audible?
Yes, sir.
Yes, sir.
Yeah.
Yes, sir.
Yes. At the outset, I am thankful to the Vice Chairman, yes, Murali Krishna, and the Secretary, Prasant Kumar, and other organizers. Thank you for giving me an excellent opportunity to share my views, thoughts on the GST latest amendment. What I am going to do today is what are all the issues that we are facing at the time of audit. There are certain issues the industry is facing. So that issue we will discuss. And then the important amendments, particularly the chairman summarily gone through all the important amendments. I will also go through in detail all the amendments, important amendments, and then some important circulars which we will cover today. So therefore, one is that audit issues, point of issues, what are all coming up. There are certain important issues coming up in the audit. The second important is the amendments and then the circulars. Let us go through one by one. The first important issues in the audit is ITC mismatch between GSTR 2A and GSTR 3B. From 1/7/2017, the GST law came into effective. GSTR 2A, no doubt, that also came. But today, what the department they are asking, whether your GSTR 2A and GSTR 3B is matching or not. Suppose if you claim more GSTR, more input tax credit in GSTR 3B, the department at the time of audit, they are asking us to reverse the credit. Whether we have to reverse it or not, that is the first question. If you see in Chennai, Tamil Nadu, and is also in Karnataka, I received certain notices. The notices says your GSTR 3B credit is 1 crore, whereas your GSTR 2A is only 70 lakh rupees. You please reverse 30 lakh rupees credit. This is a simple notice. But in some cases, what happened, the assessee immediately responds and says that we will reverse it. My view is you don't require to reverse at all. You don't require to reverse at all. The reason is the rule 36.4 came into effective only from 9/10/2019. Please be with me. The rule 36.4 came into effective only from 9/10/2019. The rule very clearly says initially it is 20% and then 10% GSTR 2A plus 20% and then GSTR 2A plus 5%, 10% and then GSTR 2A plus 5%. So the rule is stipulated what is a credit you can claim based on GSTR 2A. But according to me, even the rule 36.4 is not backed by the sections. Rule 36.4 is not backed by the section. The new amendment came 16 WAA only from January 2022. So therefore, until then, rule 36.4 is not backed by the proper section. Therefore, my view is you are not required to reverse the credit, even though you claimed more in GSTR 3B. in GSTR 3B. The assessing officer always, the adjudicating officer always says, sir, there is no, you have not done the reconciliation. If you do the reconciliation between GSTR 2A and GSTR 3B, you claimed more. According to me, GSTR 3B and GSTR 2A is not my reconciliation at all. It is not my books at all. It is not my records at all. Because GSTR 2A is maintained by the department. GSTR 2A is maintained by the department. It is not my record. So therefore, the reconciliation between GSTR 3B and GSTR 2A is not between my books. It is my books with the 2A generated by the department. So therefore, this is a point number one. The point number one is GSTR 2A is not my books. The point number two is Rule 36(4) is not backed by proper section. That is the second. The third thing is very important is Section 16 AAA CGST Act amended with effect from 1/1/2022. So therefore, until then, there is no restriction in Section 16. So if you take Section 16, Section 16 says that you must be possession of the invoice one, you must receive the goods second, the other person paid the tax, paid the return, that's all. So therefore, I fulfilled all the condition in Section 16. If Section 16 AAA is there already in from 1/7/2017, then I agree with the department. The department, they raise the issue only, the amendment is came only in January 2022. So therefore, according to me, you are not required to reverse. I don't know what happened in Andhra, but in Karnataka and in Tamil Nadu, there are a lot of show cause notices or letter. They won't issue the show cause notice immediately. They will ask you, sir, you please pay it and then pay the interest plus 25% penalty, so that we will drop 75% penalty. According to me, it is not required. You are not required to reverse the credit. Even my view is up to December 2021, you are not required to reverse the credit. This is my view. So whatever I am expressing today here is, these are all my views. Don't blame me tomorrow, because the department always will take a different stand. So therefore, in one cases where the credit is itself is in GSTR 3B is 1.75 crores, whereas in GSTR 2A it is only 1.25 crores. There is a difference of 50 lakh rupees. The department asked us to reverse it. We wrote to the officers saying that you please issue the show cause notice. We will not reverse it. So therefore, they issued the show cause notice. On the show cause notice, we replied to the officers saying that we are not required to reverse the credit. So therefore, this will be a litigated issue, no doubt about it. So therefore, but according to me, you are not required to reverse the credit. This is the point number one. Now let us come into the point number two. Is the GST on ex-factory supplies. What is this ex-factory supplies? Sir, assuming that I am a registered dealer in Tamil Nadu, I came to Visakhapatnam and I purchased a lot of goods, furniture, fittings, and jewelries, and I gave my GST number. Please be with me. And I gave my GST number. Now, the dealer in Visakhapatnam, whether he has to charge CGST, SGST, or whether he has to charge IGST, whether he has to charge CGST, SGST, or whether he has to charge IGST. Sir, got my point? Is it possible to interact with the members, sir, chairman, sir? Is it possible to unmute?
Yes, sir. Yes, sir. They can unmute and they can interact with you. They can raise queries.
So that I can. Yes, sir. Yes. So therefore, you please tell me, please understand my example. I am in Chennai, Tamil Nadu. I came to Visakhapatnam. I purchased certain furniture, fittings, and purchased certain jewelries. And I gave my GST number in Visakhapatnam. The Visakhapatnam, they raised the invoices R.Subramanian. I gave the address also. The address is Chennai address. And I gave my GST number. Now, whether the Visakhapatnam, the dealer, the supplier, whether he has to charge CGST, SGST, or IGST. Anyone can express any views, sir? Any members?
Members, you can unmute yourself.
Yes.
And you can reply the queries, or you can raise the query, or else you can put it in the chat box also, the answers to the questions raised by the speaker.
Sir, got my case study, sir? Yes. Yes. See here, what happened in this case? What happened in this case? I am in Tamil Nadu. I came to Visakhapatnam, purchased certain goods, furniture fittings, and certain jewelries also. I gave my GST number. Here, the Visakhapatnam supplier, what he will charge, whether he has to charge IGST, whether he has to charge CGST, GST. Sir, according to me, sale is completed in the counter. The delivery is also completed in the counter. No doubt I gave the address in the invoice that related to my Chennai. But once the delivery is terminated in the state, that is in the case is Visakhapatnam, the delivery is completed, sales is completed in Visakhapatnam. So therefore, in Visakhapatnam, it will be considered as only an CGST, SGST transaction. Then the next question, sir, how he will get the credit? So therefore, you have to properly draft the transaction. So therefore, the agreement or the place of supply is in Chennai. So these are all should be very important for you to treat it as an intrastate supply. So therefore, in my first example, it is a CGST, SGST transaction because sale is completed in Visakhapatnam, delivery is completed in Visakhapatnam. No doubt, I gave my GST number. Once if I gave my GST number, while filing your return, that Visakhapatnam dealer, when he files a return, it will say automatically IGST. So therefore, what you have to do, when you are filing your GSTR 1, you have to go to the place of supply, there you have to mention Visakhapatnam, then it will automatically convert it into CGST, SGST. The same example, suppose I came to Visakhapatnam, I purchased lot of furniture, fittings, etc., jewelry also, and I gave my GST number. I requested the Visakhapatnam supplier, you please send my goods to Chennai. Now he is arranging everything through the transporters, and then the goods is reached Chennai. Then in such situations, it will become an intrastate transaction. So therefore, in my earlier transaction, it is only a CGST, AGST because the sale is completed in Visakhapatnam, the delivery is completed in Visakhapatnam. Therefore, the supplier is in Visakhapatnam, the place of supply is also in Visakhapatnam. Therefore, I treat it as it is a CGST, SGST. But in case of a second example, the supplier is in Visakhapatnam, no doubt. The supplier is in Visakhapatnam. The supplier is in Visakhapatnam, but the delivery happened where? Delivery to the recipient is happened in second case, happened in Chennai because the person is sent the goods. Visakhapatnam dealer sends the goods from Visakhapatnam to Chennai. So therefore, the contract is he has to send the goods to the Chennai. So therefore, it will become an intrastate transactions. So therefore, you must be very careful on that. The third very important issue is registration under section 22, 23, 24. What is this? Sir, I am a dealer. I am dealing only in exempted supply of goods or services. Please be with me. I am a dealer. I am dealing only in exempted supply of goods or services. Exempted supply of goods or services. 100% exempted supply of goods or services. What happened in my case? I paid certain transport charges. I paid certain legal fees. That is debited in the profit and loss account. That is debited in the profit and loss account. GTA 23 lakh rupees and legal fees ₹1,50,000 rupees. Legal fees is ₹1,50,000 rupees. Now the question is whether the dealer is required to get registered under the law. Whether the dealer is registered. Whether the dealer is required to get it registered under the law. First, I told you very clearly, he is dealing only in exempted supply of goods or services. If you go through section 23, 23 says, if a person is exclusively engaged in supply of goods or services, he is not required to get it registered. He is not required to get it registered. So section 23 is very clear. Section 23 says, if you are engaged exclusively in exempted supply of goods or services, who are not required to get it registered, that is section 23. Now, if you come to section 22, 22 says, if a person taxable turnover, if a person makes a taxable supply, and if the aggregate turnover exceeds 20 lakh rupees, he is required to get registered. So therefore, section 22 says, no, you are required to get it registered once if your aggregate turnover exceeds 20 lakh rupees and where you make a taxable supply. So therefore, that is a registration under section 22. Section 23 talks about only exclusively engaging in supply of goods. Now, in example, I am dealing only in exempted supply of goods or services. Now come to section 24. 24 says, notwithstanding anything contained in any other provisions of the acts, the following persons shall require to get it registered. A person who is liable to pay tax under reverse charge mechanism, whether it is 9.3 or whether it is 9.4, once he is liable under reverse charge mechanism, he is required to get it registered. So now you come to my example. My example is, I am dealing only in exempted supply of goods or services. My entire outward taxable supply is exempted. I made GTA expenses, transport charges to the tune of 23 lakh rupees. And there is a legal expenses of 1,50,000 rupees. Now, whether I am required to get it registered or not. So therefore, my view is, if you go through section 24, 24 is very clear. 24 says that notwithstanding anything contained in section 22, it doesn't talk about 23. So therefore, my view is that the dealer is required to get registered because he is liable to get registered under section 24. No doubt, his outward taxable outward supply is totally exempt. No doubt, his outward supply is totally exempted. But he is incurring certain expenses on which a reverse charge mechanism is applicable. So once the reverse charge mechanism is applicable, he will be governed by section 24. Once he is governed by section 24, he is required to get it registered. Once he registered, he is also liable to pay the tax. Now I am changing that, my examples slightly, I will change my examples. Now, my turnover is less than 20 lakh rupees. Please be with me. My aggregate turnover is less than 20 lakh rupees. My aggregate turnover is less than 20 lakh rupees. Assuming that this aggregate turnover is only a taxable supply. So my taxable supply is less than 20 lakh rupees. I didn't register with the department at all because I know I have registered only after when I cross 20 lakh rupees. Therefore, I am very happy. Now, I am incurring a transport charges of 5 lakh rupees and I'm also incurring legal expenses of 7.5 lakh rupees. Now you tell me whether I am required to get registered under the law. So section 22 says, where you make a taxable supply and if your aggregate turnover exceeds 20 lakh rupees, you are required to get it registered. In my case, my aggregate turnover is not exceeding 20 lakh rupees. So therefore, I am not required to get it registered according to section 22. But if you see my P&L account, in my P&L account, there is an expenditure transport charges. There is an expenditure for legal charges, legal fee. So these two expenses attract a reverse charge liability. So therefore, then in such a situation, section 24 is applicable. 24 says, I am not bothered about anything, even if your turnover is nil. These are all the persons they are liable to pay under reverse charge mechanism. So therefore, section 24 is applicable. So I am liable to get registered. Be with me. I am liable to get registered, even though my turnover is less than 20 lakh rupees. Even though my turnover is less than 20 lakh rupees. Next question is, sir, I registered. Yes. You registered to discharge your RCM liability, correct? Reverse charge liability you wanted to discharge. But once you are registered, even if your turnover is less than 20 lakh rupees, you are required to get collect the tax and pay the tax on your outward supply also. See, once you are registered, all the provisions of the act is applicable. So therefore, no doubt, your aggregate turnover is less than 20 lakh rupees. That is the RCM liability. Therefore, you are registered under section 24. Once you are registered, even if you are outward taxable supply, earlier you claimed an exemption because it is less than 20 lakh rupees. Now, no doubt less than 20 lakh rupees, but you are required to pay the tax on your outward supply. So therefore, this is very, very important. So these are all the issues slowly, coming up for, audit. Let us go. Lot of issues. I will cover 7 or 8 issues, 10 issues, and then we will go for the important amendments. The next thing important is GTA and GTO. Who is a GTA and who is a GTO? Goods Transport Agency, Goods Transport Owner or Operator. So GTA is an agency. He is an agent. He is taking a goods. He is taking a responsibility, sending a goods from one place to another place. I did not get, sir. Mr. Bharat. Tell me, sir. Say, sir, you can unmute and you can ask me. Bharati Devi.
Bharati Devi garu, any query from your side?
Yeah. Yes. Right. So, a good transport agency, goods transport operator. There are a lot of differences between these two. Good transport agency means a transporter taking a responsibility of the goods and issues the consignment notes and taking the goods from one place to another place. So therefore, he is a GTA on which no doubt you are liable under a reverse charge mechanism. But GTO, he will not take any responsibilities. He will not issue the consignment notes. And he is only the operator. What he will do if you ask him to lift the goods from one place to another place, then he will immediately do it. Within the city, you may see a lot of places where they will operate. So they are not a regular, regular operator. They will take only goods from one shop to another shop or one shop to the consumer within the city, like that. So therefore, if it is a GTO, my view is that reverse charge mechanism is not applicable. So therefore, you have to examine whether it is a GTO or whether it is a GTA. But don't take a stand, sir. Even in such certain cases, even GTA is not issuing the consignment note. Even if the GTA is not issuing the consignment note, you should not send the goods because he is not taking the responsibilities. Even GTA is not issuing the consignment note. The Act says that because the reason is consignment note is not defined under the GST law. Consignment note is defined under the service tax law. So therefore, the GTA, goods transport agencies, even if he is not issuing the consignment note, whatever the document which he is issuing, that will be considered as a GTA. That will be considered as a consignment note. So therefore, you must be very clear, very careful. But GTO means I am just taking the goods from one place to another place. I am paying the transport charges. In such situations, reverse charge mechanism is not applicable. Now, the next question is, Chairman sir, Ashish Agarwal raised the hand.
Regarding this GT and GTO, I had a small clarification. At times now, what department is coming up with a unique argument that you have taken the vehicle on hire, it is not a GTO. There is nothing like a GTO.
Okay, sir. The department, there are a lot of decisions also, sir, under the earlier law. So therefore, they will do all those things. Even I am coming into other important audit findings. Let us discuss that also. So whatever they want to, let them do it. Okay. So according to me, there is a difference between GTA and GTO. No doubt about it. There is a difference between GTA and GTO. GTA is an agency transaction. GTO is not an agency transaction at all. Okay. Yes. So the next important is in GTA. The next important in GTA is what happened in certain cases. What happened in certain cases? what happened in certain cases? GTA is in Chennai. GTA, Goods Transport Agency, is in Chennai. Supplier is also in Chennai. Supplier is also in Chennai. Say, for example, Saravana Stores. Saravana Stores gave order to GTA to transport the goods from Chennai to Visakhapatnam. Be with me. Chennai to Visakhapatnam. The goods is moved from Chennai to Visakhapatnam. The goods is moved from Chennai to Visakhapatnam. Goods is moved from Chennai to Visakhapatnam. Supplier is in Chennai. And the GTA is in Chennai. Now the officer says, sir, the goods is moved from Chennai to Visakhapatnam. So therefore, whatever we paid under reverse charge mechanism, we paid the tax. The officer came for auditing. He told, no, sir, goods is moved from Chennai to Visakhapatnam. You would have paid reverse charge under IGST, you paid under CGST, SGST. Therefore, you please pay it under IGST, you claim refund under CGST, SGST. This is the view of the department officers. Please be with me. Am I clear? So therefore, in case of a GTA, supplier is in GTA is in Chennai. The recipient Saravana Store is also in Chennai. But assuming that our chairmen are ordered a lot of furniture and fittings, therefore the goods is moved from Chennai to Visakhapatnam. Now the officer says that at the time of auditing, he says that no, the goods is moved from Chennai to Visakhapatnam. So therefore it is an interstate sale. So therefore IGST is to be paid, whereas you paid CGST, SGST. Therefore we will not agree. So this is the stand of the department. If you go through, my remembrance is right, if you go through section 13.8, 12.8, goods transport agencies, in case of a registered person, the place of supply is a location of the recipient. Who is the location of the recipient here? Here a supplier is a GTA. The recipient is a Saravana Stores. Saravana Store is going to make the payment to the lorry, to the GTA. So therefore, two things is very important. The supplier is a GTA. The recipient is in Saravana Stores. No doubt the goods is moved from Chennai to Visakhapatnam. Officer says it is interstate sale. But if you go through section 12 of the IGST Act, it says place of supply is the location of the recipient. Here the location of the recipient is Tamil Nadu. Supplier is also is Tamil Nadu. Therefore, it should be CGST, SGST. But the department, they didn't agree with us. Told no, sir. It should be an IGST. So it will be an IGST only for the goods, not for the services. For goods only, if you go through section 10, A, B, C, it says when the goods terminate for delivery to the recipient, where it terminates. So those are things you have to examine. But this is a service. So therefore, it will be only a CGST, SGST transaction. So according to me, it is not an IGST transaction. But the officer, he says that no, goods is moved from one state to another state. Therefore, which is wrong, which is against the provisions of section 12. The next important is hotels in Tamil Nadu supply services to SEZ in Tamil Nadu. Very interesting. Oh my God. Hotels in Tamil Nadu supply services to SEZ in Tamil Nadu. The problem is GRT or some 5-star hotels, they supplied a services to SEZ employees. The bill is given to the concerned SEZ. Whether it is an interstate or intrastates, that is the question. The question is, if you go through section 7 and section 8, any supply to SEZ, it will be considered as intrastate. They are very happy. So therefore, if I am supplying, I am a chartered accountant. Tomorrow, if I bill to any SEZ, so I have to charge only IGST, not CGST, SGST, because any supply to SEZ, the section 7 and 8 is very clear. It will be considered as only a intrastate supply. But there is one provisions under the IGST Act. If you go through section 12, subsection 3, you may remember which is right. In respect of a immovable property, any services directly linked to the immovable property, where the immovable property is situated, is a place of supply. So therefore, place of supply where the immovable property is situated, immovable property hotel is situated in Tamil Nadu, the supplier is in Tamil Nadu, therefore it should be CGST, SGST. Therefore, the question is, sir, whether section 12 is applicable or interstate section 7 and 8 is applicable. One is overlapping. One says where the immovable property is situated, that is the place of supply. Another says no, any supply to SEZ, it will be considered as an interstate supply. So therefore, my view is that you have to go into the specific provisions. Specific provision is section 7 and 8. So therefore, it should be treated as only an interstate supply, not an intrastate supply. Any supply to SEZ, specific provisions. But if you go through section 12.3 talks about general. So therefore, section 7 and 8 is applicable. 7 and 8 of IGST is applicable. So therefore, that will be considered as only an IGST transaction. Next, very interesting issues. Prepaid contracts, eligibility to claim credit. In one case, what happened? The assessee entered into an AMC contract for 75 lakh rupees. AMC contract for 75 lakh rupees. And assuming that 1 crore, easy for me for calculation, 1 crore. He paid 18% GST. The date of contract is on 20th March. And he paid this entire 1 crore plus 18%. 1 crore 18 lakh rupees. The officer at the time of auditing came and he told me, sir, you entered an agreement in the month of March. That too, you got a invoice in the month of March 20th, 2020. So therefore, these services you are going to get only from the April or from March, from 20th March onwards, from the next year, 21st March, 2021 March. So therefore, this contract is for 1 year, but you are claiming the entire credit. Be with me. You are claiming the entire credit in March 2020, even though this contract is valid for 1 year. Therefore, I will not allow you the credit. The reason is that you have not received the services. You are going to receive the services only from April 2020 to March 2021. Or if you ask me more, I will give you the credit only for 10 days. Because this year is going to complete on 30th. So that 31st. Therefore, this 10 days credit only I will allow you. The balance I will not allow you. So this is a view of the officers. So according to me, if you go through the section 16, so it talks about only on receipt of the services. On receipt of the services. Sir, I received the services on 20th March 2020. After that, it is not possible for me to cancel the contracts. I paid the entire consideration to him. Even if I didn't pay, even then my case is more strong. In this case, I paid the entire consideration to him. I received the services. My consumption takes place from April to March. So therefore, I received the services. I am eligible to claim the credit because I fulfilled all the conditions stipulated in section 16. Moreover, if you go through section 16, 16 is very clear. 16 says on receipt of your goods or services. It doesn't talk about on consumption of your services or goods. So therefore, I am eligible to claim the credit. However, the officer didn't accept. So they wanted to issue the show cause notice. My view is that I am eligible to claim the credit even in March 2020 because I received the services on March 2020. After that, whatever I am receiving the services is over a period of time. I am receiving the services over a period of time. Sorry, I am consuming the services over a period of time, whereas I received the services in March 2020. So therefore, I am eligible to claim the credit. So the next is e-way bill for personal effects. What is e-way bill for personal effects? There are goods, certain goods moved from one place to another place. These are all personal belonging of the particular individual or particular businessman. So the department immediately sees the vehicle, sees the goods, and says that you are required to pay. In one cases, we paid the tax and then we are before the commissioner of police. We are before the appellate authorities. So that the document itself very clearly says that it is only a personal goods is moved from one place to another place. I have closed the business. Whatever, the chairs, furniture, fittings, etc. I am taking from my office to my own residence. So this is the content of the letter. In spite of that, the department, what they did, they have initiated the, detention, and then they asked us to pay the tax. So everything is happened. So therefore, we paid the entire tax. Now we are before the Commission of Appeals. So e-way bill for personal effects, if there is a specific provisions, personal effect is or totally is outside the purview of e-way bill. But the officer is raising another very interesting case, very interesting issues. He says, no, you didn't raise a tax invoice. Sir, if I am a registered person, if you go through section 31 says every registered person is required to raise an invoice. I'm not a registered person on the date of movement of your goods from one place to another place. So therefore, the raising an invoices does not arise. The officer says, no, you didn't raise a tax invoice. He told him, I'm not required to raise a tax invoice because I'm not a registered person. So therefore, raising a tax invoice is not applicable to the facts of my case. Then e-way bill. E-way bill, it says very clearly, the personal effect is totally outside the purview of e-way bill. In spite of that, this has happened. So therefore, my view is that e-way bill for personal effects, you are not required to generate the e-way bill for personal effects. This is another interesting case, additional place of business for ITC. So this case, what happened? The company is a software company having a turnover of 75 to 80 crores. They have another one divisions in other place, within the city, within Chennai, in another place. So the officer came for auditing. He verified everything, input, tax, credit, everything he verified. Finally, that lot of invoices mentioned that other place, other business premises of the appellant. So therefore, he asked, sir, what is this? He told, no, sir, another division is functioning, right? Okay, other division is functioning. Okay, whether it is registered as an additional place of business. It is not being registered as an additional place of business. So therefore, the officer immediately says, sir, you are not registered as an additional place of business. So therefore, whatever the credit is related to that additional place of business, I will not allow you. Please be careful. The additional place of business input tax credit itself is 36 lakh rupees. Why I am telling all the figures, I am handling this case. I handled this case where we are in statutory auditor of the company. And the GST audit, they completed for 18 and 19. So the officer says immediately, no, sir, we will not allow you this credit. The credit is related to the additional place of business itself. It's 36 lakh rupees. So therefore, I explained the provisions to the officers, saying that there is in section 16, additional place of business is required to be registered for claiming the input tax credit. Is there any condition anywhere in the GST? These are all correct under the excise law. These are all correct under the VAT law. But under the GST law, this is not required. So therefore, I requested him, sir, no doubt, they committed mistakes. They didn't register additional place of business. So therefore, you please levy a penalty under section 125, general class penalty for 25,000 rupees, which we are ready to pay. Other than that, nothing is there. He didn't agree with me. Then I have to meet the joint commissioners. I have to explain to him. And I told him, sir, you please go through section 16. 16 says every registered person shall be entitled to claim the input tax credit, subject to restrictions, stipulations, etc. So every registered person. So therefore, I am a registered person, sir. My only problem is my additional place of business is not registered. I am a registered person as on date. So therefore, what your superintendent, what he is telling is not correct. So therefore, this credit is to be allowed. Somehow the Joint Commissioner is convinced and he told, yes, sir, you pay the penalty under section 125. So therefore, we paid the penalty under section 125, 25,000 rupees under the CGST, 25,000 rupees under SGST, we paid it and we closed the file. So therefore, additional place of business, if it is not registered, you cannot say you are not eligible to claim the credit in respect of whatever the inward related to that additional place of business. So therefore, that must be very careful. So this is an interesting. So this is an interesting case. Government contractors, which we are facing now. I am handling 4 or 5 cases related to government contractors. Received the payment after 1/7/2017. Sir, please be with me. Sir, I received the payment from the Chennai Municipal Corporations or Vizag Municipal Corporation for the work is done prior to 1/7/2017. There is one book is called M book, work completion certificates. So all the work is completed before 1/7/2017. I received a lot of payments after 1/7/2017. The payment is 20 crores, 30 crores like that. The department, in fact, in this case, GST intelligence officer, senior intelligence officer came and verified the assessee premises. And he says that you received this much of money, 20 crores, after 1/7, you are required to pay the tax, otherwise I will arrest you, I will do this, that. So therefore, what we did to first, we verified whether the work is completed prior to 1/7/2017 or after. And we came to the conclusions the work is completed prior to 1/7, but we are not able to get any concrete details from the corporation. As you know, the government department, they won't give anything. They don't want to take any responsibilities. Therefore, they didn't give any details at all to us. So therefore, what I did then, we wrote to the officer saying that all our work is completed prior to 1/7/2017. These are all the parties, governments we worked with. So therefore, you please check it up and cross-examine. And if possible, you will also be allowed at the time of your cross-examinations. So therefore, the officer started investigating that corporations and get all the details from them. In the details, all the work is related to prior to 31/3/2000. Prior to 1/7/2017. The work is completed prior to 1/7/2017. Therefore, we took a stand saying that it is not taxable under the GST law because there is no supply under the GST law after 1/7/2017. The sales or services, these are all happened prior to 1/7/2017. So therefore, nothing is chargeable under the GST law. So the case still is going on. So therefore, this is interesting issues, which is not one or two here, almost 70-80 contractor is in a problem in respect of this. My view is that no GST is payable in respect of the work is completed prior to 1/7/2017 and the payment is received after 1/7/2017. Because if you go through section 142, if my remembrance is right, if any services or if any supply or services or sales on which the earlier law is applicable, then in such situations, no tax shall be charged under the provisions of the GST law. So if leviability itself is under the earlier law, so the question of paying the GST under the GST, the question of paying the GST is not applicable to the facts of the case. So therefore, it is leviable only under the earlier law. Therefore, the next they ask the questions whether you paid the service tax or not. Under the service tax, it is totally exempted. So we have given all the respective notification, etc. Then they agree. So which is going on. So therefore, this is very important. Fake invoices. Fake invoices is very interesting issues. If it is a fake invoices, immediately you have to reverse the credit. One. The second is your outward taxable supply also, you have to pay the tax. That's all. So that is a situation this is going on. According to me, Once it is a fake invoices, that is a question of further supply. So therefore, the department, they have to pay me whatever the taxes I paid on the outward supply. So department still they are not agreeing. They are say there is a fake invoices of 1 lakh rupees, but what happened? It shifted to 4 or 5%. Therefore, 4 or 5% is reversed. 4 or 5% outward supply. So it becomes 5 times or 6 times or 7 times. So that is not the intention of the law, but the officer is doing only this. So therefore, this is also to be, it's a long litigated case, but it has to be litigated. Now we are coming into the important amendment. Important amendment. Section 16(4), time limit for credit availment, effective from 1/1/2021. Sir, what happened? Earlier now, old provisions, I read the old provisions so that you can understand. A registered person shall not be entitled to take input tax credit in respect of invoices or debit note for supplying of goods or services or both after the due date of furnishing of the return. Very important. After the due date of furnishing the return of income. After the date of furnishing of return of income for the month of September following the end of the financial year, to which such invoice or invoice relating to such a debit note pertaining or furnishing on the relevant annual return. That is the old provisions of the law. The law is very clear. Sir, even if you raise debit note, even that concerned debit note related invoices, be with me. That is the time that you have to calculate for the purpose of eligibility of the credit. Say for example, sir, I raised invoice in the month of March 2019, 1/3/2019. I raised the invoices. Now I raised invoices 1/3/2019. Now I raised a debit note in the month of October 2020. So that invoice also raised. So both I received, as a recipient, I received both. 1/3/2019 invoices, yes, I claimed the input tax credit. This debit note also I received in the month of October 2019. I received these invoices, this debit note. So this debit note, whether I can claim the input tax credit or not, this provision says, no. This October 2019 debit note related to 1/3/2019 invoice. 1/3/2019 invoice, what is the last date is September 2019. So therefore you raised on October 2019, therefore you are not eligible to claim the input tax credit in respect of a debit note. Are you clear? So therefore, 1/3/2019 is my invoice date. I raised my debit note in the month of October 2019. This October 2019 debit note related to the invoice on 1/3/2019. So therefore, the department says, the act says very clearly you are not eligible to claim the credit. Now through these amendments, there is a dealing. Dealing means invoice and debit note is totally de-linked. So therefore, invoice relating to such being omitted. Invoice relating to such is omitted. Such invoices is omitted. So therefore, now even if your debit note is after 2 years, the concerned recipient can claim the input tax credit. So therefore, now the new provision says a registered person shall not be allowed to take input tax credit in respect of any invoices or debit note for supply of goods or services or both. Here see, any invoice or debit note. It doesn't talk about invoice or debit note in relation to. Earlier the provision is invoice relating to such a debit note. Now the provision is only debit note. So therefore, you can claim the input tax credit. So this is an benevolent and welcoming amendment, no doubt. So this is a very interesting amendment. So therefore, this is an example which I have discussed with you. I explained this. Say for example, debit note 15/8/2019. Debit notice 15/8/2019 linked to invoice dated 1/3/2019. So return for the month of September 2019, no doubt debit notice raised prior to September 2019, therefore eligible to claim the credit. Next is see an example. Linked to invoice 1/3/2019, but debit note is related to 15/11/2019. The credit is not available. The reason is, but through this amendment, now the credit is available for both the situations. For the second situation, the credit is available. So this is a interesting and benevolent amendments. Now we go into the next. Circular number CBC 20. So this is a circular number, but notification was issued, and rule number 86A, through notifications, it says that the commissioner or any officers authorized by him can block the ITC if they have reason to believe that the ITC has been fraudulently availed by the following means. So therefore, Rule 86A now allow the commissioners or any officers authorized by him can block the ITC if they have reason to believe that the ITC has been fraudulently availed. One is ITC has been availed on the basis of invoices from the non-existent suppliers or supply not received. ITC has been availed on the basis of invoices for which tax has been paid to the government. Tax has not been paid to the government. ITC has been availed on the basis of invoices for which tax has not been paid to the government. The person who is availing the credit is not existence or not conducting a business from the registered premises. Person availing the credit is not in possession of the invoices. So therefore, Rule 86A now says through notification, this rule came, says that the officers, the commissioner, not to the rank of assistant commissioner, he can block the credit. But what happening practically? So there may be one or two cases. Maybe you would have purchased from the dealers, not paid the tax. That particular dealer is not paid the tax. But the officer, immediately block the credit on the entire, which is not correct. So therefore, whatever the credit is related to that instances. So one is ITC has been availed on the basis of the invoice issued by non-existent supplier, or ITC has been availed on the basis of invoice for which tax has not been paid. So only related to that, only they have power to block the ITC. But some cases, what happening? The officers blocking the entire credit, which is not correct. So this is number one. The second very important is no opportunities record to be given. So they can, just like that, they can block the credits. So therefore, once it is blocked, it will be blocked for a period of 1 year. And then it will be unblocked. So therefore, until this 1 year, you cannot use that credit. Meanwhile, what they are doing, they will call you, they will verify everything, they will verify the counterpart, and then cross-examine, and finally they will ask us to reverse the credit also. If it is a fake invoices, if it is, ITC has been availed on the basis of invoices issued by a non-existent dealers. So these are all very important. They will block the credit. So therefore, this is very, very, very important. Is no opportunities likely to be given before blocking such a credits. So the officer, he has to record, the commissioner, he has to record only in writing. He has to record only by writing by the commissioners. So that is the next important. The next is this, all we know. This is also applicable from January 1, 2021. A restriction on use of input tax credit and the mandatory payment by cash, Rule 86B. So what is this? This is also to, to some extent, to reduce. I won't say to eradicate or it will reduce the fake invoice. So what is this says? Rule 86B. Rule 86B says that you cannot always use your input tax credit to discharge your output tax liability. Your very, very important is you cannot use your input tax credit in excess of 99% of your output tax liability. That means my output tax liability is 100 rupees. 99 rupees I can use the input tax credit. Balance 1% I have to pay by cash, even though I have a lot of accumulated credit in my books of accounts. Rule 86B says, no, I will not allow you. Rule 86B says, I will not allow you to take the credit. No, I know that you have a lot of credits. I will not allow you those credits. I will at least you pay 1% by cash. So that is Rule 86B. So therefore, this is also, to reduce the fake invoices, this provision is came into effective. But this is applicable to whom? This is applicable to whom? To a person who makes a taxable supply. So therefore, first there should be a taxable supply. The second, per month taxable supply should be more than 50 lakh rupees. So this person is applicable. So therefore, you have to examine, sir, whether my turnover is more than 6 crores. Sometimes what will happen? Your turnover may be 2 crores, but some months your turnover may be 50 lakh rupees or more. Correct. So it doesn't talk about per year. It talks about per month. So therefore, my turnover is less than 2 crores, but in 2 months, my taxable supply is more than 50 lakh rupees. Even then, this provision is applicable. This rule is applicable. So therefore, it says one is there should be a taxable supply. The second is per month taxable supply is more than 50 lakh rupees. Then in such a situation, this rule is applicable. This rule is not applicable for exempted supply. This rule is not applicable for a person who claiming a refund with the payment of tax. It's not applicable. So therefore, this rule is not applicable for public sector undertaking, local authority, this, that, central government, state government. This rule is not applicable. But very interesting is there are certain relaxation in the rules. This you must be very careful. What is a relaxation in the rule? So therefore, you have to first examine whether you are coming into the relaxations or not. First, it says that the specified person, the specified assessee, whether he is claiming a refund under the GST law. Yes. If he is claiming the refund under the GST law and if it is more than 1 lakh rupees, this rule is not applicable. So therefore, those who are claiming a refund more than 1 lakh rupees, this refund is not applicable. Those who are claiming a inverted duty structure refund, this rule is not applicable. Very good. The third is very important. Sir, for me, the 1%, no doubt I am liable to pay 1%. Whether this 1% I have to calculate on month basis or cumulatively. The rule says yes, cumulatively, you see. Whether it is cumulatively, if you make the payment more than 1%, no problem, this rule is not applicable. Next, this rule says that, sir, in case of a partnership firm, the partnership firm paying income tax more than 1 lakh rupees, this rule is not applicable. Partners, any two partners paying income tax more than 1 lakh rupees, yes, this rule is not applicable. Private limited company is the same. If the company pays more than 1 lakh rupees, this rule is not applicable. If the whole-time director is making a payment on his own, say for himself, partners or directors, if they pay tax, income tax more than 1 lakh rupees, this rule is not applicable. So therefore, you have to first examine whether the company is paying 1 lakh rupees or more, partnership firm or company, more than 1 lakh rupees tax liability, then this rule is not applicable. Then you have to, if they're not paying, then you have to examine whether the partners, they are paying the tax or not. So if the partner is paying, then in such a situation, this rule is not applicable. This is very interesting rule 86B. I gave small examples. This we have discussed. So next thing important is whether the restriction on unutilized is to apply head-wise or on aggregate basis wise. My view is you have to see on aggregate basis. SGST, You have to verify your 99% and CGST 99, IGST. It is not like that. You have to see on aggregate basis, not on headwise basis. This is my view. The next, we are coming into very interesting amendment from January 1, 2022. So these are all very interesting amendment. 16.2 AA is a very interesting amendments. All we know that what are all the specific conditions that we have to fulfill to claim input tax credit. Possession of invoice, debit note, other prescribed tax documents. This is one condition. The second condition is receipt of your goods or services. This is the second condition. Tax paid by a supplier is the third condition. Return filed by the recipient is the fourth conditions. So these are all very important. Condition for all of us to fulfill prior to 1/1/2022. What is the condition to be fulfilled to claim the credit? Now from 1/1/2022, now there is one new section is inserted. Section 16(2) is being inserted. It is inserted 16(2) CGST Act inserted. It says the detail of the invoice or debit note referred to in clause A has been furnished by the supplier in the statement of outward supply, and such a detail have been communicated to the recipient of such a invoice or debit note in the manner is specified under section 37. So therefore, the details of the invoice or debit note referred to in clause A has been furnished by the supplier in the statement of outward supply, and such a detail have been communicated to the recipients. So therefore, it is to be communicated to the recipients. This is another important conditions. So these conditions was not there in the statute book before January 2022. So therefore, my view is that in earlier, whatever I have claimed through GST or 3B, I am eligible to claim the entire credit. The reason is section 16AA came only from January 2022. Earlier, there was no such a provisions. Communication through GST or 2A, 2B, it is not there. So therefore, I am eligible to claim the credit. So this is a one view. So this is my view. So therefore, I am taking a stand saying that whatever I claimed in GST or 3B, with the proper documentation, payment, and fulfilling all the conditions in section 16, I am eligible to claim the credit. Now the sections January 2022, it says very clearly, no, it should be communicated. So therefore, from January 2022, it should be communicated. So therefore, communicated through 2A or 2B, it should be communicated through 2B. So let us verify this. Now, amendment in Rule 36.4. Now you know what is 16AA amendment. 16AA amendment. Now you see 36.4. Input tax credit shall not be availed by a registered person in respect of invoices or debit note which are required to be furnished under section 37, unless the detail of such invoices or debit note have been furnished by the supplier in the statement of outward supply. So first he has to furnish in the statement of outward supply. The detail of such invoices or debit note have been communicated to the registered person in form GST or 3B. Sorry, 2B. So therefore, now there is a rule. The rule says, no, you are eligible. See, very interesting. Input tax credit shall not be availed by a registered person in respect of invoices or debit notes which are required to be furnished. The detail of such invoices or debit note have been furnished by the supplier in the statement of outward supply, or using invoice furnishing facilities, or communicated through or communicated through GSTR 3B. So therefore, now the rule is also very clear. The rule says that one, you have to make the you have to furnish such invoices in your GSTR one, and the rule is very clear. It should be communicated through GSTR 2B. So therefore, from January 2022 onwards, it should be communicated through GSTR 2B. Therefore, whatever is GSTR 2B generated, that alone you are eligible to claim the credit. You are eligible to claim the credit. So you are eligible to claim the credit. The next thing important is what is GSTR 2A and GSTR 2B. Sir, GSTR 2B is a static one. It won't change. GSTR 2B will change on day-to-day basis. Say for example, today we are in January 2021. Now one of my supplier filing GSTR 1 for the month of November. Then what will happen I am a recipient in my GSTR 2A, my November month GSTR 2A will change. November month GSTR 2A will change. So therefore, if it related to the particular period always will change based upon the supplier filing the return. But GSTR 2B, this is a static one. It related to the particular month. So therefore, if it is not filed within the due date, then automatically go to the next month. It will not alter GSTR 2B in the previous month, whereas GSTR 2A will alter the previous month. So therefore, GSTR 2A is static one. Therefore, you have to claim the return. You have to claim the input as credit only based on GSTR 2B. But my other view is that whether Rule 36.4 is backed by the proper section. My view is still the section is not being properly, affected. But section 16AA is being amended. So therefore, there will be a possibility even for GSTR 2B also possible litigation in GSTR 2B also. So let us, we know the answer only after 5 or 6 years. So now, once it is communicated through GSTR 2B, from January 2022 onwards, you are eligible to claim the credit. Otherwise, you are not eligible to claim the credit. There are certain issues also still coming up in GSTR 2B. Sir, for GSTR 2B, okay, very interesting from January 2022. Whether it is from January 2022 supply from January 2022 or uploading of return, December return in January is applicable. My view is that it is applicable only from January 1, 2022 of a supply and as well as from this. There are other views also. No. It is an uploading. Therefore, uploading is happening in the month of January. Therefore, it is applicable even for January, even for December return also. So therefore, that we have to wait and see. This is one view. The second view is that, say what happened in GSTR 2A. First, initially, whatever your books of accounts you can claim, I claimed. After that, Rule 36.4 was amended. Then they gave me 20%. Then they gave me 10%. Then they gave me 5%. But I claimed 5% in the month of August 2021 or September to June 2021. Claimed 5% excess. But as on today, the dealer is not at all filed the return. In such a situations, what I have to do? Whether I am eligible to claim that 5% or whether I have to reverse the credit. My view is that you have to reverse the credit because you claimed more than in GSTR 2A, because Rule 36.4 says that yes, you claim plus 5%. But this 5% that the other person not paid the tax at all. The other person is not paid the tax at all. So therefore, my view is that you have to reverse the credit in respect of the transaction. So therefore, from January 1, 2022, you are required to verify GSTR 2B. Based on that only, you have to take the credit. So impact of 16.2A, very interesting. Availment of ITC based on the possession of invoices. So this I explained 9/10/2019, 10/10/2019 with effect from 1/1/2000, 110%, 105%. ITC is restricted. So this we have discussed. So now we'll see some very interesting example. ITC as per books is 1 lakh. Eligibility of ITC as per GST or 2A, 2B is, sorry, it is only a, okay, 75,000 rupees. So from 1/7/2017 to 9/10/2019, restriction is not at all is applicable. There is no provisions under the law. But there are a lot of show cause notice issued by the department saying that there is a mismatch between GST or 2A and 3B. There is a lot of mismatch. So therefore, you have to reverse the notice. Even 36, you have to reverse the credit. Even 36(4) came into effective only from 9/10/2019. So therefore, my view is that from 1/7/2017 to 9/10/2019, you are not required to reverse any credit. Even after that also, I will explain one by one. This is one. The second is from 10/10/2019 to 31/12/2019, 120% of the GST 2A is allowed. So therefore, I am allowed to up to 90,000 rupees, 75,000 plus 20%. From 1/1/2020 to 31/12/2020, 10%, 110%, 105%. From 1/1/2022 onwards, 100% of the GST are 2B. So therefore, I already explained why you are not required to reverse credit from 1/7/2017 to 31/12/2021. The reason is there is no proper backup one. There is no section like 16AA in earlier to January 2022. So therefore, you are not required to reverse the credit. Moreover, GST 2A is not my books. GST 2A is a department. So therefore, it is not necessary for me to reconcile GST 2A with 3B. I have already explained. You are eligible to claim the credit from 1/7 to 31/12/2021. So now 16(2) AA talks about only invoices or debit note. Why it doesn't talks about credit note? Credit note, the party will issue the credit note and you have to reverse the credit, correct? And then bill of entry for imports, no, that is not covering, because at the time of import itself, you will pay the tax. Distribution of the credit, there is no tax invoice at all. Bill of entry, there is no tax invoices. So first tax invoices must be there. ITC availed tax paid under overcharge mechanism is also, there is no tax invoices. Therefore, 16(2) AA covers only the invoices and debit note. 16(2) AA does not cover credit note, does not cover bill of entry for import, distribution of credit based on ISD, ITC availed as tax paid under overcharge mechanism. Amendment in Rule 36(4), which I already explained. So, GST or 2B is a static report. GST or 2B is a static report. ITC will be available only if the supplier has furnished his GST or 156 return income. Supplier not furnished the return. GST or 2B will not be auto-populated. You please be with me. You cannot claim the credit. Say for example, I purchased the goods from 5 dealers. 5 dealers not filed the return within the due date of GSTR 1. Then in my GSTR 2B, nothing will be generated. I am liable to pay on the outward taxable supply. Say for example, sir, my outward taxable supply. Sir, my outward taxable supply. Sorry, my inward supply is, I purchase the goods from 4 or 5 dealers. And based on the invoices, my credit is 18 lakh rupees. Based on the invoices, it is recorded in my books of accounts. I received the goods. I'm having the copy of the invoices. I fulfilled the conditions. Now the other person, the person who is supplying the goods is a supplier. He has not filed his return of income. He has not filed his return of income. GSTR 1 before 11th. Then in such situations, in my GSTR 2B, nothing will be generated because all my 3 vendor, they have not filed the return within the due date. But all they filed the return after the due date. So that means it will go to the next month. So this month I have to pay the tax. This month I have to pay the tax. Next month there will be a more credit to me. So therefore, the person who is supplying the goods, they have to file the return on time. If they have not filed the return on time, your input tax credit will be affected. Your input tax credit will be affected. What is Form GSTR to be? By this time, you all know that it is your static statements. It indicates availability of the credit. It indicates the reversal of the credit. Credit note also, it will made available on 14th day of the succeeding month. So it will be available. So it will show all your credit availability, ineligibility, summary of ITC not available. So everything you will get in GSTR 2B. Everything you will get in through GSTR 2B. So, so now what is the strategy to be adopted for filing a GSTR 2B? Sir, from January 2022, what I have to do? What is the procedure that I have to follow from January 2022? So there are 3 approaches. First approach is, sir, I am not bothered anything. I am claiming the return based on my books of accounts. I received the invoice, I received the goods, I paid the money to him, I paid the money to the seller. Based on that. So therefore, I claim ITC as per books of accounts. I am not bothered about GSTR 2A, GSTR 2B. No, I don't like those things. I more rely on my books of accounts. So therefore, I claim based on my books of accounts. Yes, this is over reliance on your books. And interest at the rate of 18% for mismatch is always will be there. So you'll be liable at the rate of 18% mismatch. So therefore, this is a strategy 1. I won't recommend strategy 1. I won't recommend strategy 1. Strategy 2. Sir, claim ITC as per GSTR 2B. So whatever there in GSTR 2B, I am very happy, sir. I am claiming GSTR 2B. Department also happy. Department, they are also verifying my return and they are verifying my GSTR 2B. They are also happy. Is it correct? That is also not correct because in GSTR 2B, what will happen? GSTR 2B, there are a lot of ineligible credit will be there. So therefore, you have to examine. If you are claiming as per GSTR 2B, sir, I am a law compliant. I claimed only through GSTR 2B, but the officer issues me notice. The reason is that you claimed the credit related to ineligible credit, blocked credit, everything you claimed, because everything will reflect in GSTR 2B. So therefore, the second method is also not correct. GSTR ITC as per GSTR 2B. So therefore, that also you have to see very clearly. ITC again, genuine bill recorded in the books, but not appearing in GSTR 3B. That is also is possible. 2B is also is possible. So therefore, claiming based on 2B is also not correct. You have to examine whether the 2B credit are all eligible credit. Correct or not? Just because it is appearing in 2B, that doesn't mean that you are eligible. Suppose the dealer purchased a vehicle, that will also be there. But car is a blocked credit under section 17(5). That will also be there. Repairs and maintenances will also be there. Some insurance will be there. So therefore, you must be very careful. The third method is very important. Is claim ITC after bill-wise reconciliations, which I will recommend. So therefore, what I will do, it is a law compliant method. Ready data. You can also face the department, sir. These are all the credit as per GSTR 2B. I claimed only this. These are all the bill-wise reconciliations. So therefore, this is possible. So now, after GST, there are a lot of reconciliations going on. Even this is also, one of the major reconciliation, GSTR 2B with the GSTR 3B. So I will tell you one small example. Suppose, assuming that a person who is selling the goods in the month of March 30th, I received the goods in April 2nd. I received the goods in April 2nd. Whereas that person filed the return within the due date. So therefore, it will automatically reflect in March. Whereas goods is received in April. Whether I have to claim in March or April, according to me, I have to claim in April because the section says very clearly on receipt of the goods, I received the goods only. Whereas GST 2 it will appear in only in March. So therefore, these are all the reconciliation which you have to prepare. The reconciliation will be a very big task which we have to carry out for each and every month. So that is a strategy to be adopted for filing GST 2. GST 2B reconciliations. GST 2B with my books. Why that is the difference? One, bills are not appearing in GST 2B. Probably, whereas appearing in books. So bills are not appearing in GST 2B, whereas appearing in my books. I received the goods, I received the invoices, everything I record in my books of account. It is there in my books, but it's not there in GST 2B. That means my party is not filing the return. It is a party default. So I have to separately show it is a party default. So therefore, I have to examine for the next month. I have to examine the subsequent month. Then I have to inquire with the concerned supplier. Bills are not appearing in GST 2B. Not at all appearing in GST 2B, whereas appearing in the books of accounts. So bills are not appearing in the GST 2B, whereas appearing in the books. So not recorded in the books of accounts. So bills are appearing in the GST 2B, whereas not appearing in the books of accounts. The second is wrong. Bills appearing in GST 2B, but not appearing in books. So therefore, not recorded in my books of accounts. I didn't record in my books of accounts, but it is there in GST 2B. So that means I received the invoices, but I didn't record in my books of accounts. Therefore, I have to find out the transaction second. Detail of bills as per GST 2B and books are not matching. So details of bills as per GST 2B and books are not matching. So that is one. Probable reason for party default transaction. Party default means I received the goods, I received the invoices, I recorded my books of accounts, but it is not there in GST 2B. What is the reason? One is the person is not filed the return. Okay. A supplier who supplied the goods to me, he has not filed the return. Correct. So that is the one reason. Okay. Second, person filed the return, but not within the due date. Okay. So that it will come in the next month. No problem at all. He has not filed within the due date, but however, he filed after the due date. Therefore, it will come in the next GST 2B. Party has shown the bill in the GST 1 of a prior month. So therefore, what happened? Earlier, I told you one example. March and April. He show it in April. He show it in March. But I am claiming the credit in the month of April. So April, it will not be there in GST 2B. Whereas it will be there in GST 2B of March. So therefore, that also I have to verify. Party has not filed the GST 3B of the previous month and hence not liable to file GST 1. It is a party mistake. So now the amendment says that if you have not filed the GST 3B for the previous month, you are not able to file, you cannot file GST 1. That may be the reason also. Party may have entered a wrong GSTN due to which it is not appearing in GST 2B. One reason due to which it is also appearing. That's why I already told you, just because 2B, you should not take the credit. Sometimes what will happen? The party may wrongly punch your GST number, but you are not received the supply of goods, you are not paid the tax, you are not received any services, etc. Then in such situations, yes, this is a credit, even though appearing in GST 2B, it is not my credit. There are some mistakes, some vendor is wrongly, punched your GST number. Therefore, you must be very careful not to take that credit. So that is very important. Probable reason for not recording the books of accounts transaction. Not record in the books of accounts. I didn't record in the books of accounts at all. All the bills are not booked. Or I have booked it, but I didn't show GST separately. So therefore it went to concern purchase account, concern expenditure account with all gross amounts. So therefore, I don't know how to find out what is my credit in my books and comparison with the GST. Party has shown the supply, but customer has not received the goods. Goods in transit, I already explained to you. Goods in transits. The bill is recorded in the books in previous month only. I recorded in the month of January 2022. January 2022. But supplier is filing this month. Supplier is filing this month. Party has shown the supply, but the customer is not having the invoice. He has not at all received the invoice. But however, party uploaded the details. 2B is there, but not in my books of accounts. Because I didn't receive the invoice at all. Wrong invoice reported by the suppliers. Yes, this is possible. Wrong place of supply. So now we'll see one interesting case studies. One interesting case studies. Mr. A sold goods to Mr. B on 5th September 2021 and reported the same in GSTR 1 of September 2021. The said bill is accounted in the software of Mr. B in January 2022. Since the goods are received in January 2022. Since the goods are received in January 2022. Now you please see, A sold the goods to Mr. B on 5th September 2021 and reported the same in GSTR on 10th of October 2021. The said bill is accounted in the software of Mr. B in January 2022. I am a recipient. I received it January 2022. So therefore, what has happened? In my January 2022, I have invoice, I received the goods, everything is there. But in my January 2022, GST or 2B, will it be there? No. The reason is already sold your goods on 5th September. So therefore, the supplier filed the return in the month of September 2021. So therefore, it will be already appearing in my GST or 2A, correct? So therefore, it won't come in GST or 2B at all. But now I face all those issues now. In January 2022, the officer will ask me, sir, GST or 2B is nothing, no, in GST or 2B, nothing is generated, but you have claimed a credit of 1 lakh rupees. I have to explain, no, sir, it is September 2021. So therefore, it is already reflected in GST or 2A in September 2021. Therefore, it won't come. I didn't claim the credit. Now only I am claiming the credit. No doubt it is appearing in GST or 2A. I received the goods only in January 2022. So therefore, I claimed the credit only in January 2022. Then I have to also verify, very important, I have to also prove that in the month of September 2021, whatever appearing in GST or 2A, I have not claimed the credit. If you have claimed the credit, then it will be a problem. If you have not claimed the credit, then according to me, you can claim the credit in January 2022, even though it is not reflected in GST or 2B, because it won't reflect. Because the supply happened in September 2021. I received the goods only in January 2022. What I can do? So therefore, I cannot take the credit because section 16 says you must receive the goods. I received the goods only in January 2022. So that is a case study 1. GSTR 1 filed after due date of claiming the ITC. Mr. A filed GSTR 1 of January 2022 on 25th October 2022. So that's all. You cannot claim the credit because you have to file it before September 22. You have to file return before September 22. So therefore, you cannot claim the credit. So now we will go into another. So I have covered now 16AA amendment, very interesting amendment, very important amendment. More litigations will come in section 16AA, particularly rule 36.4. We are expecting a lot of litigations. Rule 36.4 is already lot of writ petition is pending before the various high courts. So let us see. Right. Now, yes. Now,
Yeah.
so now, consequences of rule number 59. Consequences of non-filing of GST or 3B for a particular period. So it says the person will not be able to file a GST or 1 for the next month period if you are not filed GST or 3B. So therefore, earlier we were all very happy. Why? We will file all GST or 1 immediately because we don't want to get complaints or call from our respective clients. Yes, sir, I didn't get the credit, sir. You didn't file a return, sir. No problem, sir. I will file it. You will immediately file GSTR 1. You will file it very happily. But you won't file GSTR 3B at all because when you want to file GSTR 3B, you have to pay the tax. Very difficult for us to pay the tax because the other person not paid the other person is not paid. There are various reasons. So therefore, we will not file 3B at all. We are very happily file GSTR 1. So therefore, what happened? That person also happily claims the credit. Here, this person is not paid the tax. So therefore, this went. Then slowly, the act is being amended. Now it says that if you have not filed GSTR 3B for a particular month, next month you cannot file GSTR 1. Next month you cannot file GSTR 1. So therefore, slowly they are bringing that GSTR 3B is to be filed for you to file GSTR 1. That's all. Over a period of time, what will happen? First you file GSTR 3B and then you file GSTR 1. That's all. So this I am expecting very soon. So therefore, be ready for that. So a person has not filed the GSTR 3B for December month. He will not be able to file GSTR 1 for January month. That's all over. So he has to file first this. Now you come into this amendment in section 7512. Very interesting amendment. This is also our own amendment. So, these are all the amendments. Yes, sir. Yes.
Okay, sir, muted. Sorry.
No problems. These are all very interesting amendments. These are all the amendments. Our dealers, they are responsible. They did whatever they want, they did it. So what is this amendment? This amendment is talks about, okay, you have to file GSTR 1, yes. GSTR 2, 3, yes. Okay, I will file both. I will file GSTR 1 correct turnover, 1 crore. In GSTR 3B, I will file 20 lakh rupees turnover. So that you only told me that I have to file GSTR 3B. I filed GSTR 3B. You told me after only GSTR 1 is to be filed. Yes, GSTR 1 is to be filed. Now I show you correct turnover to GSTR 1. Okay, good. And for filing a GSTR 3B, I will show you my turnover is only 20 lakh rupees. That's all. So what will happen? GSTR 1, it will go. The other person will claim the credit. In GSTR 3B, the turnover will be less. Then whenever, your cash position is improved, then they will amend subsequent month, they will, add the turnover in the subsequent 3B. So this is the position is adopted by some of the dealers. What they will do? They will file in GSTR 1, correct turnover, GSTR 3B, you have to pay the tax. GSTR 3B, nobody liked it because before filing it, it asks you to pay the tax. That is the problem. So therefore, GSTR 3B, they will show only less turnover. Now this act, what it says, no problem. If you show the turnover in GSTR 1, and if you show the turnover in GSTR 3B, and if there is any differences, that will be recovered as a self-assessment tax. That will be recovered as a self-assessment tax. That means no show cause notice is required. No show cause notice is required. The officer is not required to issue that. Earlier, we took a stand saying that you issue the show cause notice. Now the officer can say, no show cause notice is required, sir. You please see section 75.2. I can immediately, I can immediately recover the tax under section 79. Even he can attach your bank account, even he can attach your property. So therefore, this is section 7512. 7512 is a self-assessment tax. So therefore, if there is any difference between GSTR 1 and GSTR 3B, the differences will be recovered as an unpaid self-assessment tax, and very important is, and the officer got the power of recovery under section 79. Power of recovery under section 79. So therefore, you can immediately attach your bank account. That is the positions today. That is the position. Today, this is also is applicable from 1/1/2022. This also is applicable from 1/1/2022. So suppose, sir, I committed some small mistakes, typographical mistakes, these mistakes, but I subsequently rectified. In such a situation, even if the officer asks you, you please go and explain. There is one circular says that if there is any genuine reasons and if it is explained, then no course action is required to be taken. Yes, sir? Yes. So EVA bill, retrospective amendment. So, okay. What is this EVA bill? No, I will come to that later. A retrospective amendment in section 71AA. What is section 71AA? This is not much relevant for all of us, but I will explain. Calcutta Club, the Supreme Court under the service tax law, under the VAT law, had held that the members and the club are one and same. Therefore, no tax, no VAT or no service tax is applicable. So therefore, we followed that Calcutta High Court saying that we are very happy. The same is also continuing under the GST law because the languages and provisions are all almost similar. GST law borrowed from service tax, borrowed from VAT law. So therefore, it should be applicable. So in order to club that, section 71AA is being amended. It says that even the club and members are two different persons. So therefore, notwithstanding anything contained, any degree, judgment, etc., any law, etc. So therefore, the club and the members are two different persons. Therefore, the club are liable to pay the GST. So that is the crux of the amendment. Section 71AA, very important. This is a retrospective amendment from 1/7/2017. See, the activity transaction by a person other than individual to its members or constituents, vice versa, for cash or deferred payment or valuable considerations. Supply includes. For the purpose of this class, it is hereby clarified that notwithstanding anything contained in any other law, for the time being enforced on any judgment, decree, or order of any court, tribunal, or authority, the person and its member shall be deemed to be a two separate person, and the supply of activity or transaction intersection shall be deemed to be take place one such a person to another. So therefore, members and clubs are two different persons. Therefore, they are liable to pay the GST. Clubs are liable to pay GST not from January 2022, from 1/7/2017 onwards. So by this time, they claimed exemption. So therefore, they have to pay out of their profits. It is not possible for them now to collect a tax from the members. So changes in time limits, this I will come later. Yes, amendment in section 107. After covering 129, I will come. Appeal to appellate authorities. 83 is a provisional attachment to product a revenue in certain case scope widened. So earlier, if there is an investigation or proceeding is pending under section 73, 74, etc., 129, 130. So now there are a lot of judgments. It says that there is no pending proceedings. There is no show cause notice under section 73, 74. So how can you attach the bank account? Now the law says very clearly, I will here. Before 1/1/2022, assessment of non-filers of return, assessment of unregistered person, summary assessment, inspection, search and seizure, demand 73, 74. These are all alone is covered earlier 1/1/2022. Assessment of non-filers of a return, assessment of unregistered person, summary of assessments, in some special cases. Inspection, search and seizure, demand 73, 70. These are all the cases only the department have power to attach the properties to product a revenue. But after 1/1/2022, you please see self-assessment tax, very important. GSTR1 and GSTR3B will be considered as a self-assessment tax. If there is any differences, provisional attachment is possible of your property. Now, the provisional attachment is extended to even a self-assessment. Self-assessment liability, if you have not paid it, possible provisional attachments. Provisional assessments, section 60 new. Earlier it is not there. Earlier only 62, 63, 64, 67, 73, 74. Now you see 59, 60, 61, scrutiny of returns. I am scrutinizing your return. I issued a notice, ASMT 10, call for certain details. I am an officer. Okay, right. I will attach your bank account. I attach your property. Possible. Assessment of non-filers of returns. Assessment of unregistered person. These are all already there. 62, 63 already there. 63 already there. 64 already there. 67 already there. Now you see 69. Inspection of a goods in movement. See, it's inspection of the goods in movement. When there is an inspection of the goods in movement, and if the officer feels that the revenue to protect the revenue, they may attach the properties. Summon. I issued a summon only, that's all, to call for certain details. Now January 1, 2022 says that I can attach the properties. So these are all demand 73, 74 already there. So therefore now the provisional attachment is totally widened. So therefore you must be very careful. Don't think that it is only a self-assessment tax. Self-assessment tax, if you have not paid it, the officer has a power to attach your property. Therefore you must be very careful. So amendment to section 151 is not much relevancy. So this is very important because now you know that Aadhaar authentication is very important. Aadhaar authentication for proprietorship, proprietor has to do it. Partnership firm, partner has to do it. And company also MD, whole-time directors, HEF, Karta, trust and trustees. These are all Aadhaar authentication is required. Particularly Aadhaar authentication. If the Aadhaar authentication is not done, the assessee will not be eligible for filing an application for revocation of cancellation. Filing of refund application, you can't do it. Refund under Rule 94, also not possible. Export out of India is also not possible. So this is the Aadhaar authentication. Now bank account for credit of refund. So now we have to furnish the bank account. That's very important. Now we will come into the interesting issues. Changes in transaction with e-commerce operators. So e-commerce operator earlier, some vehicle, Ola, Uber are all covered. Now it says that rickshaw, auto rickshaw, and e-rickshaw, these are all also is covered now. So therefore they are liable to pay at the rate of 5%. This is a notification under section 95. So therefore now through e-commerce operator, they have now included certain vehicles, particularly e-rickshaws and auto rickshaws, metered cabs, etc. So these are all is included. Now, now very important is restaurant services. Chairman also pointed out to this, chairmans are pointed out e-commerce operators in respect of restaurant services. There are a lot of, I'll take 10 minutes for this. There are a lot of, confusion also in this area, in this amendment, changes in case of e-commerce operators. So restaurant services, normally what happened? Restaurant services providing services. So therefore they are liable to pay tax at the rate of 5%. But there are other kitchen called as a cloud kitchen or center kitchen. So there won't be any facility at all. Just you have to go and buy the particular food, that's all. Or you can order through Swiggy, Zomato, you can order it. So there won't be any restaurant at all. It will be only a cloud kitchen, or it will be only a central kitchen. So there they will prepare and give it to you. So what happened in case of those kitchen, central cloud kitchen or central kitchen? The department took a view. You are not at all providing any services. So you are preparing 1,000 paratha and you are giving to someone, and you are preparing a samosa and giving to someone. So you are doing this work. That is, you are not providing any services. Therefore, it will be considered as a supply of goods. Therefore, it will be considered as a supply of goods. This is represented to the government, and then the government issued a notification saying that there also is a restaurant, because it is, after all, it is for consumption. So therefore, it will be considered as a restaurant on which liable to pay GST at the rate of 5%. That's all. Now these amendments, the e-commerce amendments, what it says now, suppose other than that specified premises, that means a specified restaurant, hotel, those who are charging more than 7,500 rupees tariff rate, other than those who are all supplying the food to the e-commerce, to the Swiggy or to the Zomato or to the e-commerce operators. Earlier, the hotel is, earlier the restaurant is paid the tax. Now this amendment says that, now the e-commerce operators, they are liable to pay the tax. The e-commerce operator, they are liable to pay tax. So therefore, if Saravana Bhavan Hotel is selling these foods through e-commerce operators, the e-commerce operator, they have to issue the invoices to the customer. They have to collect the tax and remit to the governments. So therefore, the e-commerce operator is not required to collect TCS. As you already know that according to section 52 of the CGS Act, e-commerce operator, they are required to collect a TCS. But this transaction, the e-commerce operator, they are collecting and they are paying the tax. So therefore, the e-commerce operator not required to collect TCS, but they are required to collect, they are required to pay the tax, collect the tax, and they are required to pay the tax to the government. So that is, this is the amendment. The next important, sir, very interesting. Sir, whether the e-commerce operator is a restaurant, so it is not a restaurant, correct? So they are collecting the food from the particular restaurant and paying it. The rate of tax you explained very clearly, 5%. Whether they can claim the credit, input tax credit. So the amendment says very clearly, they cannot. E-commerce operators shall pay the entire GST liability only in cash. So therefore, they cannot take the credit. Even if they have any accumulated credit related to the other services, even then they are not eligible. The reason is they are paying a tax only at the rate of 5%. The 5% category, no input tax credit is allowable. So therefore, no ITC set-off is available against outward supply. E-commerce operator doing a lot of other services also. They are purchasing and selling the goods and they are receiving the commissions. So therefore, the entire e-commerce operator, they are not eligible to claim the credit, or only the particular restaurant is not eligible. Credit is not eligible to claim the credit. The act is very clear. Only on the particular restaurant-related services, you are not eligible to claim the credit. But in respect of other services, whatever your input services, you can claim the credit. So that is very important. ITC of e-commerce operator can be utilized against GST outward commission, because if the income is commission, whatever the other credit other than restaurant, they can claim, they can utilize it to discharge their output tax liability. So that is the changes in case of e-commerce operator. Now the question is, sir, okay, e-commerce operator, explained very clearly that e-commerce operator, they are liable to pay tax at 5%. They are not eligible to claim the credit. They are eligible to take the credit on their other services or RPA. What will happen in the case of a hotel, restaurant? E-commerce operator, they are required to issue the tax invoices. The circular says, if my remembrance is right, circular number 167, it says that e-commerce operator, they are liable to issue the invoice. They are liable to raise an invoices. So now we will come to the restaurant side. Restaurant, what they can do? Restaurant is supplying the goods to the e-commerce operator. Restaurant is supplying the goods to the e-commerce operator. Whether the restaurant is required to raise invoices, tax invoices, restaurant cannot raise the tax invoices because it is not a taxable supply for restaurant. So therefore, the restaurant will raise a bill of supply. So based on that, they will acquire the input, and then e-commerce operator raise an invoices on the tax invoice on the customer and pay the tax. Now the question is, very interesting question is, in the case of a hotel, whatever the supply made to, very important, whatever the supply is made to the e-commerce operator, whether it is a taxable supply, exempted supply, or non-taxable supply. So that is a very interesting issues which are going on. But luckily, the circular number 167, even though I am not agreeing with the circular, but it is a beneficial to us. The circular says it is an exempted supply. It is an exempted supply. So therefore, therefore the restaurant will show whatever the supply made to e-commerce operator as a exempted supply. So now the government's works contractors. So government works contractor, there are the amendments, notification number 15/2021. Sorry, amendment and changes in governments. 1st January 2022. From 1st January 2022, earlier government entity and governmental authority charged which authority, the rate of tax was 12%. Now it is increased to 18%. Now the rate is increased to 18%. Earlier, pure services to the government or governmental entity, governmental authority, local authority is exempted. Now, only government, local authority exempted. Pure services provided to governmental entity and governmental authority, tax rate is 18%. The tax rate is 18%. So I think with this, I almost completed the important amendments in January 2022. So another 10 minutes or 15 minutes, I will cover other important circulars. So the next important circular is Rule 45, notification number is 35/2021. What it says, ITC 04. ITC 04 is a form. It has to be filed by the principal. It has to be filed by the principal for inward outward of the goods for job work. So the goods from principal to the job worker. ITC 04 is required to be filed for each and every quarter. Now this notification says, and the Rule 45 is also amended. Now it says that a person whose aggregate turnover, very important, whose aggregate turnover exceeds 5 crores, he has to file ITC 04 every 6 months. So every 6 months, he has to file ITC 04. Now, quarterly return is removed. Now you have to file in every 6 months. In any other cases, yearly once. So therefore, this is also a welcoming amendment. Even for small dealers, they are required to file this ITC 04. ITC 04 most of the time was not available. And there are a lot of glitches in the system. So therefore, this is a very welcoming amendment. The next is very important. New Rule 89 1A. time limit for refund of tax in view of section 77. What it says that, very interesting, what it says that, it says, section 17 or section 19 is very clear. It talks about you are required to make a correct payment, and if you paid any payment wrongly, you can claim the refund. Say for example, sir, for particular transactions, I have to pay CGST, SGST, but I paid IGST. The Act says, yes, you make the payment IGST first and then claim the refund CGST, SGST. This is also happened to some auditing cases. The officer asked me, you pay it under the correct tax, and then you claim a refund. When you file a refund, the refund authority says 2 years is over. Say for example, for the month of September 2018, there was an audit for 17-18. They found certain transaction. They told it is IGST only. They asked us to pay IGST. We paid the IGST. Then they asked us to claim the refund. But they came in the month of 2021. So therefore, when I claim a refund, it says that your refund application is time barred. So 2 years time period is over. Now what it says, this amendment says, these rules now it is being amended. It says, before the expiry of a period of 2 years, from the date of payment of the tax on the interest rates applied. So therefore, when you are making a payment from the 2 years is applicable. Therefore, I made a payment in September 2020. No doubt it is related to 18, but I am eligible to claim the refund up to 2022. So therefore, the time period will be within the. So therefore, this is also a very interesting welcoming amendment. Printing of job works is not important. So these all we know that transportation of the goods by aircraft, transportation of the goods by vessels is now it is exempted supply. It is being extended up to September 2022. Intermediary services. So this is a welcoming circular. The circular is clarified a lot of confusions. The officer normally what they will do, if you are acting between 2 or more person, then only it will be considered as an intermediary. Officer always, even principal to principal also officer treated as an intermediary services. Intermediary services is being defined in the Act, in the IGST Act. Intermediary means the agent or broker or any other person or facilitate the supply of goods or services he will be considered as an intermediary. But in the cases, in lot of cases, the department officer immediately treated the intermediary, and then whatever the refund is claimed, they asked us to pay to the governments. Now the circular says that for an intermediary, minimum of 3 parties must be there. 2 distinct supplies must be there. There should be a 2 supply. Minimum of 3 parties. Minimum of 3 parties must be there. 2 supply must be there. Services provided to a character of agent, broker, or similar person. So does not include a person who supplies the goods or services or both on his own account. Subcontracting for services is not an intermediary service. If I am subcontracting, the department took a view it is only a intermediary services. So therefore, this circular is a welcoming circular. Clarified a lot of doubts. Now we'll come into very interesting is distinct person. Very important. So in the case of a distinct person, we own, in the case of a distinct person, I own case before the Commissioner Appeal that was published by the Taxman of India, taxman.com. Department took a stand saying that parent company and a subsidiary company are a distinct person. Therefore, any services provided by a subsidiary to parent company, subsidiary is in India, parent is in outside India, Therefore, that will not be considered as export services, which is not correct. And then the circular is welcoming circular. Company incorporated in India and a body corporate incorporated under the law of a country outside India, which is also referred to as a foreign company or separate person under the CGST Act, and thus are separate legal entities. So therefore, it is a separate legal entities. Earlier, the department took a stand saying that they are a distinct person, therefore I will not allow you the credit, because section 2 subsection 6 of the IGST Act clearly says that if it is a distinct person, no export benefit is to be given. So therefore, it is not a export services. The department took a stand. So before the circular, I won one case before the Commissioner Appeal that was published in the taxman.com. After that, there are a lot of issues all over the India. Therefore, the circular was issued to clarify the positions. So this is we have discussed section 77, 2 years time period, which we have discussed. So this is very important. GST rate on external batteries sold along with the UPS system. What it says, this is a circular. What it says, very interesting. It says UPS and batteries are two different things. Even if it is attached, UPS battery is at the rate of 28%, UPS is at the rate of 18%. So what we did, we charged at the rate of 18%. Now the clarification says, that UPS and inverter are sold on the same invoices or separately known, and they are two different items. I'm not able to understand the circular. The circular says UPS and the battery, attached battery, are already known to the customers. So therefore, UPS is different and the battery is different. Therefore, when you are selling the UPS along with the battery, you have to charge UPS at the rate of 18%, battery at the rate of 28%. This is the positions of the circular. But all we know that what is a composite supply? Composite supply means two or more taxable supply, of which principal supply. The principal supply is only a UPS. Therefore, my view is that the entire transaction is liable at the rate of 18%. But the circular says, no, you have to charge two differently. One is battery separate, another one is UPS is separate. I am not agreeing with the circular whether UPS can function without battery. So therefore, the circular is to be charged. According to me, the circular is not correct. Okay. Cloud kitchens. Cloud kitchen, I already explained. What is cloud kitchen? Whether they are selling a goods or are they providing a restaurant services? This is clarified. This is a welcoming amendment. Even if cloud kitchens or central kitchen, if they are only selling the goods through e-commerce operators, even then the rate of tax is 5%. Now from 1/1/2022, only e-commerce operator, they are liable to pay tax. Suppose if they are selling on their own, no doubt they are also liable to pay at the rate of 5% on their own sales. For e-commerce sales, through e-commerce sales, e-commerce operators, they are liable to pay the tax. I think with this, these are all not much relevant. Services supplied by a contract manufacturers to brand owner for manufacture of alcoholic liquor for human consumption. So therefore, if you go through the notification number 11/2000, it says food and food product, the job work charges is 5%. Therefore, some of our clients took a view. So they are doing some job work to the liquor manufacturer, brand owner manufacturer. They are doing some services. They took a stand that liquor is also a food. Therefore, I will come into food and food product. Therefore, I will charge you at the rate of 5%. Therefore, this is clarified by the government. Liquor is not a food. Food and food products excludes alcoholic beverages for human consumption. So earlier they took a stand that the food and food products includes liquor. Now it is clarified. Therefore, any services provided to the contract manufacturers, liquor services supplied by a contract manufacturer to brand owners for manufacture of alcoholic liquor for human consumptions. Now it is not liable at 5%, it will be liable at 18%. So, Jyoti Construction vs Deputy Commissioners. This is very important. Can pre-deposit under section 1076 through electronic credit ledger. Electronic credit ledger. That means, sir, I have a lot of credits. Now I am filing an appeal before the first appellate authority. I have to make the payment of 10%. Yes. Whether this 10%, I have to make the payment of 10%. Whether this 10%, can I use the credit? Can I use the credit accumulated in my books of accounts, accumulated in the GST or 3B? It is there in electronic credit ledger. Can I use it? The Jyoti Construction says is no. According to me also, it is not, it is not available to you. You have to make the payment only by cash, through electronic cash ledger only. You have to make the payments. So with this, I have almost completed all my presentations. Thank you for all of your passion daring. So any questions, I am ready to answer. Yes, sir, Chairman, sir.
Thank you very much, sir, for detailed presentation. Almost 90 plus 100, nearing to 100 slides presentation without giving any break. You have covered extensively the amendments in detail. So I request the members to unmute yourself and you can raise any queries if you have, or else you can put in the chat box so that the eminent speaker will clear the doubts in the minds of members. Members, you can unmute yourself and you can ask directly to the speaker. Sir, one question in the chat box, sir. Amendments relating to e-way bill.
I didn't cover it. Amendment related to e-way bill, correct? 1 minute. Sir, section 129, section 130. So earlier, what happened? Once the goods are detained, they will give you the time up to 14 days. If you are not responding within 14 days, then section 130 is applicable and the goods will be confiscated along with the conveyance. That is the earlier provisions, section 129 and the 130. You have to make the payment of 100% tax plus 100% tax as a penalty. That means if your tax is 18 lakh rupees, 18 lakhs tax plus 18 lakhs penalty, 36 lakhs you have to make the payment to clear the goods. Now what they did? So instead of tax, now they amended 200% of your penalty. 200% of your penalty. And the time period also is reduced from 14 days to 7 days. So they will give you a notice within 7 days. After that, within 7 days you have to respond. And then now they also know there is amendment in 144. My remembrance is right, rule 144A. It says that within 14 days time, first 7 days they will give you the notice. Next 7 days you have to reply. If you are not replying, then the officer will auction the goods. If it is a perishable, within 15 days. If it is perishable, less than dates. So therefore they will complete the proceedings. So earlier, very important is, earlier 100% tax plus 100% penalty. Now it is only 200% of your penalty. Now it is only a 200% of your penalty they will recover. So you have to make the payment. Now they are not, whether it, I don't know what happens in Andhra, but in particularly in Karnataka and in Tamil Nadu, they are not accepting furnishing a bond. Even I am handling one case in Mysore. There also, they asked us to pay the tax and then go for appeal. So therefore, we paid the entire tax and now we are appeal before the appellate authority. So therefore, one is in respect of tax, 100 plus 100 is being reduced to 200, and the number of days is also being reduced. So that is a major amendment in section 129 and 130. Yes, sir.
Regarding section 16AA, so this is Ashish.
Yeah.
Regarding 16AA, it says communicated to the supplier.
Yes.
So, sir, according to you, is it 2A or 2B, sir? First question, a regular question.
And such details have been communicated to the recipient, supplier and recipient. I am the supplier of goods. You are purchasing the goods from me. Who is the recipient? Who is the supplier? I am supplier. You are the recipient. Correct.
Yes.
So therefore, I will file my GSTR1. Once I file the GSTR1 within the due date, it will automatically reflected in GSTR2B of in your return, in your portal.
Yes.
Yes.
Sir, but still we have a 2A.
Sir, my view is after 1 month to over a period of time, 2A will become redundant. 2A won't be there. Okay, over a period of time, not immediately, over a period of time.
Sir, actually, we will seek your view in the latest judgment by Honorable Supreme Court regarding this 2A. There was one comment by Honorable Supreme Court, that is Bharti Airtel case. Where they said that these type of 2A, 2Bs and all those things are only facilities. They cannot form basis of giving credit. There was a 2-para opinion by Honorable Supreme Court. So, sir, will it have any bearing on this, sir?
Sir, Finance Minister FAQ also says 2A is a facilitator. But what is happening practically today? What the department is doing? So therefore, I also told you 36(4) GSTR 2B, it has to be litigated, all I explained. So therefore, according to me, if you want to litigate, we can litigate. There is no issues at all.
No, sir, as of now, because 2A is there, okay, we can understand that in past 2A will not be there, but today 2A and 2B both are available to the recipient.
Correct. You want to take credit only on 2A.
Or at least on the invoices which are available in 2A on the date of my filing of 3B.
That is why the amendment 36(4), you see, the amendment says GSTR 2B, doesn't talk about 2A. You please see my 36(4), 1 minute, 36(4) rule. See, the detail of such invoices or debit note have been communicated to the registered person in form GSTR 2B. 2A is not there.
Not there.
Yeah. So in spite of all, even rule 36(4) is to be litigated, no doubt about it. It is not backed by proper section. The section is not is not inserted properly. All these things is there. So these are all, which we have to fight. That's why I told you to take 5 to 6 years to know the positions. Those who wanted to litigate, they can go. I told you, there are 3 or 4 situations. I told you, you want to take as per books of accounts, take it and take a risk. So those who wanted to be conservative, they have to go. Those who don't want to litigate, they have to follow. Those who wanted to litigate, yes, they can.
One problem comes in only where the 16(4) is coming into picture. 16(4)(c).
Yes.
That is the due date. By the date of due date, the other person is not uploading. And I am running at a risk of losing the credit because the time period for claiming the input tax credit is over.
Understood.
So the dealer is left with no other option except for losing the entire credit just because other dealer has not uploaded.
Yes, sir. According to the section, yes, it should be at least before September.
Actually, we have taken one stand in one case very latestly. So if we go through section 16(1), I mean 16 to the conditions, it starts with notwithstanding anything contained in this section. So now 16(2) prevails over 4 or 4 prevails over 2, sir.
So you wanted to tell me that 16(4) is notwithstanding anything contained in section 16(1). It doesn't cover 16(4), correct? So these are all the views are also there, sir. These are all the views.
See, anyhow, we have to save the client. So we have taken one view that, see, I didn't receive the invoice or the other dealer has not uploaded since the condition is not satisfied. and it starts with a non-withstanding clause. So it's override 16.4. It has to be read
Correct. These are all.
period on which 16.2 is satisfied from that year, September.
Okay.
But the condition itself is not satisfied. The question of availing input doesn't comes into picture.
Correct.
And it starts with non-abstaining clause.
Correct.
So this is one way we are trying. As of now, officer has not passed the order. Anyhow, we are preparing for
Sir,
appeal.
these are all. You please be sure that only in tribunal or high court. That's all. Or Supreme Court.
But anyhow, we have to take the proper stand before the AO, no, sir. If we don't take a stand before AO,
you have to take. Yeah, that's why whatever the grounds you want to raise, there are other. That already the tax is paid by that person. He has not uploaded the return. Or the person, assuming that the person is instead of showing B2B, so it as B2C, then it will not come to your GST or 2A. But anyway, he would have paid the tax, correct? So that also you have to verify. If it is a B2C, instead of B2B, if he has shown us B2C, then at least try to get a certificate from him that he has already discharged a liability, but wrongly B2C instead of B2B. That also will save you.
Even in one case, we demonstrated that other guy has rightly shown it GSTR1. Luckily, both the cases are with the same officer. The other guy's GSTR1 is showing our invoice. But our 2A is not showing that invoice.
Okay.
So even technical glitches are also there.
Yes.
And sir, regarding now coming to e-waybill, you have discussed it regarding that
e-waybill. This is what is the period, sir? Period. Sir,
so the period is 1819.
What is the period?
Period is 1819, sir.
1819. Okay.
Yes. And even in one case, we have asked the officer. Luckily,
yes,
what happened?
Sir, 1 minute. 1819 means I told you, the rule 36.4 came into effective
no,
only
we are taking that stand, even though we have taken that stand, but this is additional stand.
Yes, okay, right.
And even in one case, we have asked the officer, have you got any understanding with the supplier? Because the supplier is also on your rolls. You are not asking him to pay tax, but you are asking me to reverse the ITs.
Okay. That you also rely on that Madras High Court decision.
Bethel.
Yes. Bethel Enterprises.
So even anyhow, we have got good number of judgments even in our erstwhile VAT regime. Where similar provisions are there.
Vinayaga agencies, Johnson distributors, a lot of case laws are available.
And even I remember one Tamil Nadu High Court judgment is there where they said that if there is a mismatch, please make a cross verification. Without cross verification, you cannot directly proceed with the disallowance of ITs.
Okay, yeah. I also saw that decision.
I had that judgment with me. And sir, this is one part. And sir, regarding e-waybill, as you are discussing, sir, at times officer is asking to pay tax and then only go for appeal. Now the problem is, anyhow, we have deposited the tax here.
Yes.
And if it doesn't rise demand under DRC 07, the system is not allowing us to file the appeal.
Okay.
And again, we have to pay 10% pre-deposit.
No. See what you have to do. So this is, I also faced it. So they will give you an order, I think MOV 09 order they will give. Against that order, you have to prefer an appeal. That is the point number 1. When you are making the payment, you have to make the payment in DRC 03. In the DRC 03, you have to write under protest, I am paying this. Before that, what you have to do, you should not accept whatever, the reason or whatever the notice they are giving you in DRC, in MOV 0304, they will give you the show cause notice, they will give you the letter. While replying, you should not accept. You have to say that I am not accepting all this, point given by the officer. These are all my points. I am against the proposal made by the assisting officer. I am preferring an appeal. So therefore, I request you to kindly pass an order. So once they will pass an order, MOV 07, MOV 09, against that you can prefer an appeal. While preferring an appeal, what will happen, once MOV 07, when it comes online portal, the 10% liability against that, it will show, 0. The liability will not be there. So they will create a liability. Once you make the payment, that liability will become nil. So when you are filing an appeal, you are not required to pay again 10%. Got the point, sir?
I got the point, but we need to see this practically because once the
Well,
MOU 09
I handled 5 or 6 cases.
because
So
anyhow
what they will do, they will.
we are convincing them for the bond. We are convincing with them
No,
bond.
they are not accepting. Particularly, I know that Karnataka and Chennai, they are not accepting.
It's very tough, sir. I understand it's very tough.
Handled.
It's really tough. We are accepting with bond and bank guarantee.
Okay. They accepted.
Yes, sir, they accepted, sir.
Very good. Then where, sir? Where, in which state?
In Andhra one and Telangana one, sir.
Okay, right, sir. I don't know. That's why I told you in Karnataka and
No, it's
here
really
they are not
tough task. It's a really tough task.
very, very difficult.
For
They are not.
accepting itself, they take 1 or 2 days.
So what they will do, they will raise a liability in MOU 09. Once you make the payment, they will offset it. When you are preferring an appeal, you are not required to pay again 10% because you already paid the entire tax and entire tax. Therefore, again paying a 10% tax is not applicable. Next, sir.
Sir, actually, and this one thing, sir. So it seems that we are moving from a free cash flow to non-free cash flow.
Yes, sir. Seamless credit. From seamless credit, we are going sealess credit. Hello?
Yeah, yes, you are right, sir. Thank you.
From seamless credit, we are going to sealess credit. Okay. Right, sir. Sir, any other question, sir?
Any other member having any query, please? Unmute yourself. You can ask. So it seems there are no doubts in the minds of members. You have completely covered the entire subject thoroughly. So thank you very much for accepting our request and addressing our members, sir.
Thank you, sir.
Next time we expect you for a physical seminar in Visakhapatnam.
Sure, sir.
We request you to attend for that and address our members physically in person once things comes to normal. So now I request our branch secretary, C.A. Prashant Kumar, to propose vote of thanks.
Respected Chairman, C.S. Muralakrishna Garu, learned speaker, C.A. Subramanian G, past chairman, other senior members, and other dignitaries, good evening to all. I am privileged to propose vote of thanks for this seminar on my own behalf and behalf of the Visakhapatnam branch members. Sir, I convey my sincere thanks for accepting our invitation and sharing your valuable knowledge for the benefit of Visakhapatnam members in spite of your busy schedule, sir. Sir, your comparative analysis for old provisions with the new provisions, from registration provisions to up to latest amendments with the support of decided case laws are covered extremely and exhaustively and extremely well, sir. Thank you very much for your wonderful deliberations, which are very much useful to all our members, sir. Thank you very much. Members, tomorrow branch is celebrating Republic Day at our branch premises, and flag hosting will be done by 9 a.m. and followed by the breakfast. On 29th January, we have a seminar on GST annual returns and the reconciliation statements, an update by CA Ganesh Prabhu from Chennai. I request all the members, please join and get benefited out of it. Thank you one and all. Thank you very much.
Thank you, Subramanian sir. Namaste.
Thank you. Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you. Camera on.